So guys, let's quickly revise AS-22. AS-22 guys deals with accounting for taxes on income. So for this guys, they should know that there is something called as accounting income beta and taxable income. Accounting income beta is the amount of income that you're reporting in your books of accounts as per the accounting principles that are given under accounting standards. Taxable income is the income guys on which you're supposed to pay taxes as per the provisions of income tax laws. Now, the amount of taxable income may not match with the amount of accounting income. Few reasons for differences that I told you better is depreciation under books of accounts is computed on each asset separately guys. You also compute profit or loss every time an asset is purchased, every time an asset is sold. But under income tax as such guys, we follow block of assets method guys. Depreciation is not computed on each asset separately. Instead it is computed on a block of assets. And that also better, it is only written down value method guys. So that is why the amount of depreciation under books of accounts and the amount of depreciation guys under income tax can be different. However, over the entire useful life of the asset as such better, the amount of depreciation that you're claiming will still be equal to the cost of the asset. So that is why depreciation can result in a difference between your accounting income and taxable income. Next beta, I spoke about provision for doubtful debts. Under income tax as such beta, provisions are not allowed as expenditure, only actual expenses as such beta can be deducted. So if there's provision for doubtful debts, you're reducing it from your accounting income, but under income tax it is disallowed. The expenditure will be allowed guys as and when actual bad debts occur. Next beta, we spoke about section 43 capital B adjustments. There are few payments which will be allowed under income tax if and only if the payment is made on or before the due date for filing return of income. Under books of accounts guys, it is mandatory for us to follow accrual concept. So that is why guys, whether or not the amount is paid, we are going to deduct it while computation of your while computing your accounting income. Apart from that beta, I said there can be donations as such guys to private trust which are disallowed under income tax, but under books of accounts guys, you will not have to worry about whether it is disallowed or allowed. You will deduct it as an expenditure. If there's any expenditure that you're incurring on CSR guys, I told you it is disallowed under income tax, it is allowed as an expenditure under books of accounts. So all of this beta can result in a difference between your accounting income and taxable income. Current tax is the amount of tax that is payable as per the provisions of income tax laws. This current tax will arise on the amount of taxable income. Because your accounting income does not match with taxable income as such guys, and you're booking current tax based on taxable income, the objective of this standard is to match your total tax expenditure as such guys with the amount of accounting income. This adjustment is done through the concept of deferred taxes. You will either create an additional liability or you will create an asset as such better just to match your tax expenditure with your accounting income. For this purpose guys, we divide the total differences between accounting income and taxable income as such guys into two heads called as timing differences guys and permanent differences. Timing differences are those that originate in one period guys and will reverse in the subsequent period. Permanent differences as such guys will never subsequently reverse. They originate in one period and will never subsequently reverse. Donations to private trust is an example of permanent difference because it is permanently disallowed under income tax. Likewise better, if there is payment made for CSR as such guys, it is also a permanent difference. Cash payments made above 10,000 rupees are also permanently disallowed under income tax. That will be a permanent difference between accounting income and taxable income. Depreciation, provision for doubtful debts guys, section 43 capital B adjustments, unamortized preliminary expenditure, all of these as such beta will be timing differences. Though they result in a difference between accounting income and taxable income in the current year, subsequently as such beta the difference is going to reverse. Deferred taxes are recognized only in respect of those timing differences as such guys that are going to affect your future tax liability. Any timing difference that results in a lower taxable income in the current year, which in turn will result in a higher taxable income in the subsequent years, in respect of that beta you will have to create a deferred tax liability. Because you will have to pay more amount of taxes on a later date, you recognize that liability now only. On account of any timing difference, if you're paying a higher amount of tax in the current year, but then you will end up saving taxes on a later date, you will have to recognize deferred tax asset. Because there is a saving arising as such guys on a later date, you will have to create deferred tax asset in respect of those timing differences. Depreciation usually guys under income tax is higher. That will result in a lower taxable income in the current year, but in subsequent year better depreciation will again be lower under income tax, resulting in a higher taxable income. That is why depreciation normally results in creation of deferred tax liability. Just in case they give depreciation lesser under income tax, instead of assuming that to be an origination of difference, you will assume it to be a reversal of deferred tax liability. Likewise, but a provision for doubtful debt, section 43 capital B adjustments are something that result in a higher taxable income in the current year. You end up paying a higher tax in the current year. As and when the difference reverses in the subsequent years, you will save taxes. That is why beta they will result in creation of deferred tax asset. Are we clear about this? So always know what is the meaning of the word deferred tax liability, deferred tax asset. इसके बाद में guys I moved on, मतलब I took examples बेटा of provision for doubtful debts and actual bad debts. We compared it. For that you can refer to the notes के साथ बेटा detailed manner में समझ में आ जाएगा. हाँ बेटा. If at all there is unabsorbed depreciation as such guys and carry forward of business losses, first you will again check what are the timing differences between accounting income and taxable income guys. Permanent difference है तो DTA DTL नहीं आएगा. On timing differences you will have DTA and DTL. After that guys, if at all you have unabsorbed depreciation and carry forward of business loss, you know that you can carry forward the loss and adjust against the future profitability. As and when you adjust these losses against future profitability, you're going to save taxes. Because you're saving taxes on a later date, you're going to recognize deferred tax asset on unabsorbed depreciation and carry forward of business losses. Now, whenever we talk about creating an asset, you are crediting your P&L account. Because you are crediting your P&L account, there will be recognition criteria. Deferred tax liability ke liye beta recognition criteria is pretty simple. The conditions should be met. Something that results in a higher payment of tax on a later date, you'll have to directly create a deferred tax liability. Asset ke liye guys, normally beta there should be reasonable certainty that there will be sufficient taxable income that is going to arise on a later date against which you will be able to set off your differences. So that is a recognition criteria for deferred tax asset, reasonable certainty of sufficient future taxable income. However, if you have unabsorbed depreciation guys and carry forward of business losses, the fact that you are a loss making entity as such beta, it means that they might not be future taxable income. That is why guys here we look for virtual certainty with other convincing evidence that sufficient taxable income will arise on a later date. I told you example guys of virtual certainty as such beta is if you already have contracts received and you know that executing those contracts will result in recognition of profit on a later date. So that will be guys your virtual certainty with convincing evidence. This is the recognition criteria. If at all you have loss under the head capital gains as such guys, even for that you will have to create a deferred tax asset. For that the recognition criteria is again same. There should be reasonable certainty. However, if you have unabsorbed depreciation as such guys under PGPP or carry forward of business losses, even for loss under the head capital gains, you will have to check for virtual certainty with other convincing evidence. Are we clear about this guys? Next beta, I spoke about order mein, tax holiday period. I said guys there might be a period, tax exemptions as such guys given to certain entities for a specific number of years. Because we are creating deferred tax asset or liability in respect of the differences beta that can impact our future tax liability, tax holiday period can also impact recognition of deferred tax asset and deferred tax liability. For this all you have to do beta is check when the difference is expected to reverse, irrespective of the period in which the difference is originating. Doesn't matter whether the difference is originating before, during or after the tax holiday period. As long as the differences are reversing during the tax holiday period, there is no deferred tax asset or liability required because it is not going to impact my future tax payments. But if the differences are reversing before the tax holiday period or after the tax holiday period, I will have to create deferred tax asset or liability. One standard example यहाँ पे, you will have timing difference of 200 lakhs in the first year, 400 lakhs in the second year. Tax holiday period is 10 years. Every year the difference will keep reversing by 10 lakh rupees. I said out of the first one 200 lakhs, 80 lakhs will reverse during the tax holiday period. So you will create deferred tax asset or liability only on the remaining 120 lakhs. Second year का 400 lakhs बटा जब first year का ही reverse नहीं हुआ है तो second year का is entirely reversing after the tax holiday period. On that amount के साथ बेटा you're going to create deferred tax asset or liability for the entire amount. So for this purpose, beta, we follow FIFO method, which means that the differences originating first as such, guys, are expected to reverse first. That was about tax holiday period. After tax holiday period, guys, measurement, guys. I said whatever is the amount of current tax as such, beta, will be measured at whatever is the applicable tax laws as such, guys, and the applicable tax rates. As far as deferred taxes are concerned, guys, because we are talking about again the impact on future tax liability, instead of taking current tax rates, you should take tax rates that have been substantially enacted as such, guys, by the balance sheet date. Meaning what, guys? If there is already a change announced in the tax rate that is going to apply to future years, you will have to take those change tax rates into consideration for computing your deferred tax asset or liability. Is that clear, guys? If an entity is subject to tax rates at slab rate system, beta, you are supposed to consider average tax rate for computing your deferred tax asset or liability. You should never discount deferred tax asset or liability, beta. Though the amounts are going to impact future tax liabilities, discounting allowed nahi hai. It should be directly stated at the entire amount. Now, because deferred tax asset as such, guys, is based on recognition criteria, you're supposed to review deferred tax asset, guys, at the end of every year. You will have to check whether the recognition criteria still holds good. If the recognition criteria does not hold good as such, beta, you're supposed to reverse the deferred tax asset or liability, that deferred tax asset as such, beta, that has been recognized. Likewise, there may be a scenario, guys, wherein you did not recognize deferred tax asset earlier because the recognition criteria was not met. So in case the recognition criteria is now met as such, beta, you're going to recognize deferred tax asset now. Now, unabsorbed depreciation mein ek part bolna bhul gaya. Even if there is no virtual certainty as such, guys, you can still recognize deferred tax asset to the extent of deferred tax liability. Annual report bataya tha beta kiska? Tata Motors. I said they recognize deferred tax asset as such, beta, to the extent of deferred tax liability. As far as presentation and disclosure is concerned, guys, I said you're supposed to show the entire breakup of deferred tax asset and deferred tax liability as such, guys, under notes to accounts. कौन से component पे deferred tax asset है, कौन से component पे deferred tax liability है. The net amount as such, guys, will be reported under non-current liabilities or non-current asset, depending on whether it is a liability or an asset. You report net basis as long as such, beta, you have the right to adjust those differences under the respective tax laws. I gave an example wherein if you have an Indian subsidiary, guys, and a US subsidiary, in Indian subsidiary it is a deferred tax asset, in US subsidiary it's a deferred tax liability. Then I said, beta, please do not adjust. You report deferred tax asset separately and deferred tax liability separately. Likewise, I said, beta, if you have loss under the head capital gains resulting in deferred tax asset and PGBP differences are resulting in deferred tax liability, you cannot net it off. You will have to report them separately. After this, beta, the last concept that we had, guys, was in relation to minimum alternate tax. MAT में बोला था, guys, that companies are subject to minimum alternate tax. The provisions of minimum alternate tax state, guys, that a company would be liable to pay taxes based on normal provisions or based on book profits, whichever is higher. Book profits is not the same as accounting income. It is accounting income subject to certain adjustments. So in case a company is paying minimum alternate tax as such, guys, whatever is the excess amount paid over and above the normal tax, you can carry forward that as a credit and adjust it in the subsequent years as and when your normal tax is more than your MAT tax. How is that affecting our deferred tax calculation? Standard is very clear. Over a longer period, you anyways end up paying taxes based on your normal tax rates. That is why even if a company is subject to minimum alternate tax as such, guys, you should be computing your deferred tax asset or deferred tax liability based on the differences between your accounting income and taxable income. Book profits nahi aayega beech mein, and it should be based on your normal tax rate. MAT rate is not relevant. Matlab whatever we have learned so far, the same procedure will apply as such, guys, for computation of deferred tax asset or deferred tax liability, even if a company is subject to minimum alternate tax. Are we clear about this? Yes or no, beta? So that's the end of this revision. All right, guys, let us quickly revise AS-16. Notes है तुम्हारे पास? मेरे पास है बेटा, सुनो. Are you sure I did not revise AS-16? All right, guys. You're wasting my time. Anyways, beta, let's quickly revise accounting standard 16, beta, borrowing cost. Normally, guys, whatever is the amount, now you can check whether मैं रट्टा मार के आ रहा था नहीं आ रहा था, बहुत दिन हो गया ना. मैं उनको वही बोला यार जल्दी बोलो क्योंकि फिर वापस रट्टा मार के आना पड़ता रिवाइज करने के लिए. So AS-16 as such guys, borrowing cost deals with the recognition of interest in the books of accounts. Normally whatever is the interest expenditure as such guys is transferred to P&L account. AS-16 covers those instances guys where borrowing cost will not be transferred to P&L account, instead it will be capitalized. For this guys, you should know what is the meaning of the word borrowing cost and then what is a qualifying asset. Two important things. Pehle talking about borrowing cost. So we are only talking about those instances where interest as such guys will not be transferred to P&L account, it will be capitalized, included in the cost of an asset. So for that borrowing cost ka definition guys, it says borrowing costs are those expenses that are directly related to your borrowings. So it includes, there are 5 points given. The first point beta is interest and commitment charges on borrowings. Second point beta is amortization of premiums or discounts in relation to borrowings, and then amortization of any other ancillary costs in relation to borrowings. The ones who are done with financial management, you will know better that we're talking about issue expenditure, regular interest payment, and then redemption expenditure. All of that collectively as beta will become your cost of debt. इसके अलावा बेटा fourth point talks about finance charges arising under a finance lease. Fifth point talks about exchange differences guys on foreign currency borrowings to the extent they are considered as an adjustment to borrowing cost. ये क्या है पढ़ाऊंगा. So all of these beta are included in the definition of borrowing cost. Borrowing cost does not include any opportunity cost. Meaning if a company has equity share capital as such better, you cannot say that there is an opportunity cost and I will capitalize dividends on this thing. You are talking about only capitalizing that expenditure that otherwise would have been transferred to P&L account. So there's no opportunity cost, there's no equity dividend, there's no preference dividend. Are we clear about this? Qualifying asset as such beta is an asset that takes a substantial period of time to get ready for its intended use or sale. It can either be an item of inventory or it can be an item of property, plant and equipment or intangible asset guys, as long as the asset takes a substantial period of time to get ready for its intended use or sale. Substantial period of time guys is normally considered to be 12 months, presumed to be 12 months. However, the organizations can take a lesser period as such better to be a substantial period of time if interest is a substantial component of the overall expenditure incurred. They can consider a lower period to be a substantial period of time. So this standard states that in case you have borrowing costs that have been incurred in relation to a qualifying asset, then that borrowing cost will be added to the cost of the qualifying asset rather than transferring it to P&L account. That's the intention of the standard. That does not mean as such beta that you consider equity dividend or preference dividend as borrowing cost. Also guys, investments are not qualifying assets, because investments are ready for use as such beta as and when you are acquiring them. Examples of qualifying asset beta can be construction of factory building as such guys, it can be a construction contract as such beta AS-7 wala, it can also be development expenditure as such guys that is taking a substantial period of time. Alright, so for this guys now you should know as to ye jo last point hai beta, to the extent that they are considered as an adjustment, pehle wo cover kar lu. So borrowing cost mein last point beta says that principal difference on foreign exchange borrowing is also considered as a borrowing cost. So for this better, imagine that you have taken a loan of $1 lakh rupees as such guys and the exchange rate is 82 rupees. In case you would have taken a loan in rupees, you would have taken 82 lakh rupees worth of loan. Interest rate on foreign currency borrowing is 4%. If you would have taken a loan in rupees better, interest rate is 7%. Okay. Now year ka beginning mein exchange rate is 82 rupees, year ke end mein exchange rate is 85 rupees. The principal difference component is 3 rupees per dollar multiplied by $1 lakh. The principal difference is 3 lakh rupees. This 3 lakh rupees can also be considered as borrowing cost, subject to a maximum of difference between what would have been the interest if you would have taken a rupee loan and what is the actual interest that you're paying under dollar loan. Difference between interest on rupee loan, interest on dollar loan is the limit, subject to which this 3 lakh rupees also can be considered as borrowing cost. Agar difference between interest on rupee loan, interest on dollar loan 2 lakhs hai, so out of 3 lakh rupees you can take 2 lakhs as borrowing cost, remaining 1 lakh will get transferred to. If the difference between interest on rupee loan and interest on dollar loan is 4 lakhs, the entire 3 lakh rupees will be considered as borrowing cost. I also told you beta that this is compared with para 46A. Para 46A beta is applicable in respect of long term. यहाँ पे long term short term का concept नहीं है. Asset should be a long term asset as such, but it should take a substantial period of time, but borrowing can be short term borrowing also. Para 46A is applicable to long term foreign currency monetary items, guys, and there beta there is no restriction on the amount that can be added to the cost of the asset, and it is not till the date the asset will be available for use. AS-11 beta is as long as the asset borrowing continues as such beta you can keep adding. So इसीलिए मैं बोला if para 4E of AS-16 is applied, then you cannot apply para 46 capital A of AS-11. All right. Recognition criteria is very simple, guys. इतना अच्छा लिखा हुआ. Recognition criteria, guys. देखो नजर लग गया, लिखा ही नहीं. So recognition criteria beta or in relation to AS-16 is very simple. It is the same recognition criteria as an asset. Cost can be measured and there should be future economic benefit. So borrowing cost will be added to the cost of a qualifying asset as such, guys, as long as the borrowing is an qualifying borrowing. It should be eligible for capitalization. I said a borrowing would be eligible for capitalization, guys, if you can prove a small relationship. If you are not incurring expenditure on the qualifying asset, you should not be incurring borrowing cost. If this nexus can be proved as such beta, we can say that the borrowing is directly related to the qualifying asset. I said it will never be difficult to prove this relationship. Why, guys? Even if I am spending money out of surplus funds beta to construct an asset, I can always prove that in case I am not spending that surplus funds on the qualifying asset, I could have used that money to repay my existing borrowings. Yes or no? So every borrowing as such beta can be considered as related to your qualifying asset. इसके बाद में बेटा I said that you have to divide your borrowings into two categories beta called as specific borrowing and general borrowings. A specific borrowing as such, guys, is one that is directly related or directly taken as such beta for the construction of a specific asset. General borrowings, guys, will either be existing borrowings that you already have in your books of accounts, or if multiple borrowings are taken for multiple assets. Single borrowing for multiple assets is still a specific borrowing. Multiple borrowings for multiple assets or pre-existing borrowings as such, guys, will be considered to be general borrowings. If it is a specific borrowing as such, guys, I know exactly kaun sa interest relates to which asset. That is why beta interest to be capitalized will be equal to total expenditure that you are incurring, but minus income from temporary investment of surplus funds. This comes for what? Specific borrowing. You capitalize interest right from day one. However, you may not end up using all the funds on day one. You may park those investments as such, guys, in instruments. So that is why you say beta that it is the entire interest incurred minus temporary investments se jo bhi aa raha hai. This is for what? Specific borrowing. For general borrowings, guys, you take weighted average interest rate and plus you will capitalize interest only from the day the amount is spent. If I'm spending the amount beta on 31st March, I will capitalize interest for one day. Because you are capitalizing interest only from the day the expenditure is incurred, there is no income from temporary investment of surplus funds. But for specific borrowing as such beta, because you are capitalizing interest right from day one, you should deduct income from temporary investment of surplus funds. This is about general borrowings and specific borrowings. After this beta, we moved on to the three main points. I said there is commencement of capitalization, suspension of capitalization, cessation of capitalization. Commencement of capitalization, guys, I said the criteria is very simple. You should be incurring borrowing costs, matlab borrowing liye so hai tum log, and you should have started constructing the qualifying asset. You started spending money on that qualifying asset. Activities should be in progress. Only then beta you can start capitalization. You can start commencement nahi beta, you can start capitalization. Commencement itself is you should start capitalization. Are we clear, guys? Next beta, for this purpose I said, guys, expenditure incurred on the qualifying asset will involve expenses paid in cash, expenses that involve you assuming interest bearing liabilities, guys, or transfer of an asset. If I am buying raw materials from Patil as such, guys, and I'm using that for constructing my asset, but I did not pay money to Patil yet, is my investment blocked? My investment is not blocked. I bought raw material from him, I did not pay him money yet. So this cannot be considered as a part of your expenditure incurred. Are we clear about this? Expenditure incurred में बेटा तुम्हारा investment block होना चाहिए. So it should either be cash payment or it should be internal transfer of an asset as such, guys, or it should be assumption of interest bearing liability. From this you will reduce, guys, whatever is the amount of subsidies received or whatever is the amount of advance payment, progress payments received, guys. That will become your net amount blocked. If I am capitalizing interest for second year, I should also include interest of first year, guys, in my expenditure incurred. If I am capitalizing interest on a monthly basis, when I am capitalizing interest for second month, I should also include interest that I capitalized in the first month. There was one question beta in which we did monthly compounding. Interest was computed on a monthly basis. We kept adding it and then we computed how much was the amount of interest to be capitalized beta from the second month. So that is about commencement of capitalization. Suspension of capitalization, my guys. If at all your activities as such, guys, are suspended for a temporary period, guys, you should also suspend capitalization. Okay. If there is no physical work being carried out as such, guys, you cannot continue to capitalize interest. You will have to suspend capitalization. When you suspend capitalization as such, guys, I said in case there are technical or administrative work that is being carried out as such, guys, then there is no need as such, guys, for you to suspend capitalization. Also, if the physical construction was stopped due to nature of the asset, there is no need for you to suspend capitalization. Cessation of capitalization beta is basically you stopping capitalization. You should stop capitalization as and when the relative asset as such beta is available for use. Okay? Or it is substantially available for use. Even if there is minor work pending as such, guys, but that does not stop you from utilizing the asset, you should stop capitalization. If an asset comprises of multiple phases, multiple blocks as such, guys, and each block can be used separately, each phase can be utilized separately, each phase should be considered as a separate asset for the purpose of capitalization. Also, guys, one more point that I spoke is, in case you're capitalizing interest, you have to ensure that the amount capitalized can never exceed the recoverable amount of the asset. Recoverable amount interest capitalized should not exceed borrowing cost beta, correct? Amount that you are capitalizing should not exceed the recoverable amount of the asset. In case the amount exceeds recoverable amount of such beta, the excess should be transferred to P&L account. Same point was there in AS-26 also. Whatever amount that you are incurring during development phase as such, guys, you have to ensure that the amount capitalized cannot exceed recoverable amount of the asset. वहाँ पे हर एक क्वेश्चन में बेटा amount incurred was more than recoverable amount. We have transferred the entire excess amount to P&L account. Are we clear, guys? In the end, beta disclosure requirement, you just have to disclose what is the amount of interest that was capitalized during the year and whatever is the accounting policy for borrowing cost. Any doubt in this, guys? Sure. All right, beta. Let's quickly revise accounting standard 18, guys. Related party disclosures. The intent of this accounting standard is to provide additional disclosure requirements in respect of the related parties and the transactions that have been entered into with the related parties. The objective behind giving these disclosures is to ensure that investors know what proportion of transactions as such beta have been executed with the related parties, because they may not be at arm's length price, they may not be at fair values. This standard should be applied to both standalone financial statements as well as consolidated financial statements. There are only two things that you're supposed to know under the standard. First part beta is what is the definition of the word related party. The second part is the disclosures that are required in respect of those related parties. Now, starting off as such beta with the definition of the word related party, I said related party as such, guys, covers any entity that is able to exercise significant influence or control over another entity. There are 5 types of relationships that are covered as such, guys, in which this relationship is deemed to exist. Pehle, control ka definition beta is where one entity is able to exercise, but basically if the company as such beta has the power to direct the policy making process of another entity, we say control exists. This control beta can be either through you owning more than 1/2 of the voting power of the other entity, or you having a composition over you governing the composition of the board of directors. Significant influence beta exists wherein you have the power to participate in the policy making process. This power to participate is deemed to exist if you own 20% or more of the voting power of the other entity. So that is about significant influence. Now, there are 5 types of relationships as such beta that are covered under this standard, wherein we assume that this control and significant influence part exist. The first point as such, guys, covers holding companies, subsidiary companies, and fellow subsidiaries. Enterprise that are controlled by or control other enterprises, guys, or are under common control will all be considered to be related to each other. There were a couple of examples that we did as such, guys. The first one was direct holding subsidiary relationship. If A Limited holds 70% of B Limited, then A Limited is the parent entity, B Limited is the subsidiary entity. A Limited will be related to B Limited, B Limited will be related to A Limited. The next one beta is chain holding, where A Limited invests 70% in B, B has a subsidiary C Limited. So A Limited के लिए both B and C will be subsidiary entities. B Limited के लिए A Limited is parent entity, C is a subsidiary company. C के लिए बेटा दोनों are parent entities, where A is the ultimate holding company or the ultimate parent entity. Also, guys, if A Limited has two subsidiaries as such, guys, A Limited, all of the three entities beta will be related to each others. But B Limited and C Limited, which are subsidiaries of A Limited, will be termed as fellow subsidiaries. So this is the first point bit of related party relationships, which covers holding companies, subsidiary companies, and fellow subsidiaries. The second point beta covers associates or joint venture of the reporting entity and the investing party as such beta for that associate and the venturer for that joint venture. Co-associates, co-venturers are not related parties. So if A Limited owns 30% of B Limited as such, guys, A Limited will be the investing party, B Limited will be the associate. Both of them will be related to each other. A Limited has a subsidiary, B Limited has an associate, C Limited. Then, guys, for both A Limited and B Limited, C Limited will be considered as an associate. Alright. C Limited as such, guys, will be related to both A and B Limited. However, beta, if A Limited has an associate B Limited, which in turn has an associate C Limited, A and C will not be related to each other. Associate of an associate is not considered as a related party. Are we clear about this? Next, beta, if A Limited has a subsidiary B Limited, A Limited also has an associate C Limited, beta, B and C Limited will not be related to each other. This is not on account of common control that you make all of them related. Are we clear? Only if there is common control as such, beta, all of them will be related to each other. Any doubt in this, guys? Another example, A Limited has two associates, B Limited and C Limited. Here also, beta, we concluded that B and C will not be related to each other. A will be individually related to B Limited, A Limited will be individually related to C Limited. वैसे बेटा, if A and B have created a joint venture AB Limited, guys, A Limited and B Limited individually will not be related to each other. A Limited के लिए AB Limited is a related party, B Limited के लिए AB Limited again is a related party. So this is the second point beta that covers associate joint venture relationships. The third point beta covers individuals who directly or indirectly own an interest in the voting power of the entity that gives them significant influence or control and the relatives of such individuals. The definition of the word relative beta is one step down, one step up at the same level. So it includes parents, it includes children, it includes spouse and brother and sister, siblings. These are the only people that are included in the definition of the word relative. So if any person has such beta, so when you're computing this holding as such beta of an individual, you should also include the holdings of those related parties as such, relatives as such, guys. Then collectively you'll have to check whether the combined holding is 20% or more. Only then you will know beta whether significant influence exists or not. We gave an example as such beta where Karthik owns 21% of T Limited. I said because he's directly owning 21% as such beta, Karthik exercises significant influence over T Limited, therefore Karthik will be a related party of T Limited. Then beta we said that Yash owns 17% and Yash ki wife as such beta owns 4%. So because Yash ki wife comes under the definition of the word relative as such, guys, collectively the holding is more than 20% and hence beta Yash will exercise significant influence and hence Yash along with all of his relatives beta will be related parties. Are we clear about this? The next point is such beta covers KMP and their relatives. The definition of the word KMP beta are the people who are responsible as such, guys, for directing, planning and controlling the organization, activities of an organization. This is why we include only whole-time directors, managing directors as such, guys, managers in the definition of KMP. So any KMP as such beta is deemed to be a related party of the organization. All the relatives of KMP also will be related parties. The last point beta covers those enterprises over which the individuals that are described in point C and point D are able to exercise significant influence. So if the managing director of A Limited has shares in another company as such beta that gives him significant influence, say if MD Person A beta is the MD of B Limited. Person A owns 30% of C Limited. Then even B Limited and C Limited will become related to each other. Are we clear, guys? This is about the definition of the word related party. Only these 5 relationships as such, guys, are covered under Accounting Standard 18. After this, we did the exceptions to related parties. Now, merely because 2 entities have directors in common as such, beta, they will not become related to each other unless, beta, that director is a KMP in both the organizations. Are we clear? Merely because you have one customer, one distributor as such, guys, or one supplier over whom you are economically dependent as such, guys, that one supplier customer cannot be considered to be a related party. Providers of finance as such, guys, trade unions also cannot be considered as related party in the normal course of business. If there are any transactions to which confidentiality laws apply as such, beta, you cannot consider them. You will not be disclosing them as such, beta, under related party disclosures. All the PSUs cannot be considered as related to each other, guys, merely because government is a common shareholder. Likewise, beta, any transaction between holding and subsidiary companies, because they are not reported in consolidated financial statements, there will be no disclosure, beta, on them under related party disclosures. Joint venture का एक point याद रखना बेटा, that joint venture is deemed to exist if and only if there is a contractual agreement between the parties as such, beta, that signifies that they will exercise joint control over that entity. We are going to cover this definition under Accounting Standard 27. Now, when it comes to disclosures of related party transaction, related party as such, beta, first, as far as name and nature of relationship is concerned as such, guys, it is required to be disclosed where the relationship is on account of control, whether or not there is any transaction. In respect of other relationships as such, beta, name and nature of relationship is required to be disclosed if and only if there are transactions during the existence of the relationship. You do not check for the existence of relationship as on the balance sheet date as such, beta. Even if the relationship existed for 1 day as such, guys, you will have to identify that person as a related party. As far as other disclosures are concerned, guys, if at all there are transactions with that related party during the existence of the relationship, you will have to disclose what is the nature of the transaction, what is the amount of the transaction as such, guys, or the proportion of transaction, what is the amount outstanding as such, guys, as on the balance sheet date, what is the amount of provision that was created in respect of this, provisions that were written back. Also, if there's any other information that is important to understand related party transactions as such, guys, are required to be disclosed. Aggregation is permitted as such, beta, provided you do it on the basis of nature of transactions and nature of the related party. Are we clear? Now, majority of the questions as such, guys, here as I told you, will only be in respect of identification of related party. Just be good at those relationships as such, guys, point 5s and exceptions to that. That should be sufficient. Are we clear, guys? Let us now revise Accounting Standard 17. We'll continue in the same video only, guys. Accounting Standard 17, guys. जब गले की लगी रही तो पूरी लगाते बट अच्छे से. हाँ, Accounting Standard 17 is साथ बेटा segment reporting. Now, segment reporting is again a disclosure standard, meaning it has nothing to do with how are you going to account for anything, guys, in your financial statements. It is only about disclosing additional information, guys, under notes to accounts. An organization need not have only one product line as such, beta, need not operate in only one geographical segment or only in one location as such, guys. If an entity has multiple product lines, if an entity is operating in multiple areas as such, guys, as an investor, you might be interested in knowing what is the contribution of each product line, what is the contribution of each location as such, guys, in the overall revenue and profitability of the organization. All of that information will not be available, guys, on the face of P&L statement or on the face of balance sheet. This is why as such, guys, additional disclosures are required under notes to accounts. Now, AS-17 segment reporting standard is mandatory, guys, only for level 1 and non-SMCs. If an organization comes under SMC category or level 2, level 3, level 3 as per ICAI classification as such, beta, segment reporting is not mandatory. Also, if an entity is presenting both standalone and consolidated financial statements, disclosures are required only on the basis of consolidated. तुम्हारे को करना है करो तुम standalone के basis से, कुछ problem नहीं है, but as per the standard, it is required only on the basis of consolidated financial statements. It is not required on the basis of standalone financial statements. Related party beta for both. It is required for both standalone as well as consolidated financial statements. To understand this standard as such, guys, you should know first what is the definition of the word business segment, geographical segment as such, beta, and then segment asset, segment liability, segment revenue, segment expenditure, segment result. Let me finish the revision, but I'll take care of other things. First, talking about business segment as such, guys, it says that business segment is a product or a group of product or services whose risk and return characteristics better differ significantly from the other products or the group of products or services. While determining this risk and return characteristics as such, guys, there are certain points that are to be considered. The first one better is nature of product, nature of production process, guys, distribution network, the class of customer, and regulatory requirements. This will determine as such better whether a particular business segment, whether a particular group of product or service, guys, should be reported separately or not. We took the example of ITC as such better, whether FMCG, cigarettes, FMCG, other products, hotel business, agricultural products as such better, stationery products, paper boards. All of them were identified as different business segments. Likewise, a geographical segment as such better is a business environment, economic environment, guys, whose risk and return characteristics differ significantly from the other economic environments. What do you consider better as the political environment as such, guys, the rules and regulations that prevail as such better, the currency risk as such, guys, fluctuations in those currency rates. All of that better should be considered in deciding whether a particular locality, particular region as such, guys, should be identified as a separate geographical segment or not. इसके बाद में बेटा we did the definition of the word segment revenue. अरे रे लिखा है ना यार इतने सारे. Segment revenue, segment expenditure, segment asset, segment liability, segment result. Before we start the definitions, I told you anything in relation to investments, anything in relation to borrowings, taxes, general corporate assets, extraordinary items should not be included anywhere in segment revenue, segment expenditure, segment asset, segment liability. If you have investment and the related dividend income, interest income, nahi loge. If you have borrowings and the related interest expenditure, guys, you will not take that into consideration. If you have corporate head office expenditure and head office asset, that also should not be considered. If you have, मारूंगा बेटा सही में बोल रहा हूँ अभी एक को. This also will come in revision because of you guys. But anyways, better. And extraordinary items as such, guys, all of this better will not form part of your segment ke definitions. Segment revenue, guys, includes revenue as such better which is directly attributed, which can be allocated on a reasonable basis, plus inter-segment revenue. याद रखना बेटा, inter-segment revenue does not form part of your financial statements. It is only for the purpose of disclosures that we are taking inter-segment revenue, inter-segment expenditure. Even to check whether it's a level 1 entity or not, you only take external revenue into consideration. You do not take inter-segment revenue. Likewise, better, your segment expenditure will comprise of expenditure that is directly attributed as such better, that is directly related, that can be attributed on a reasonable basis, guys, and expenditure on account of inter-segment transactions. Segment assets also same better, which arise on account of operations of the segment or which can be allocated on a reasonable basis. Even segment liability same. Segment result is the difference between segment revenue and segment expenditure. Once we identify all of this as such, guys, I said the next important thing in the entire standard beta is identification of reportable segments. What do you understand by identification of reportable segments? Not if a company has 30 different product lines, we are not going to disclose information of each of the product lines separately under notes to accounts. We will be disclosing information as such, guys, only about the significant segments. Baki sab beta will be clubbed under others category. Now what should be reported separately, what should be clubbed under the others category is what we're trying to understand better under identification of reportable segments. There are 3 quantitative limits. Most important part of the standard is this only. There are 3 quantitative limits that are given under the standard. It says if segment assets are 10% or more of the total segment assets, then it should be identified as a reportable segment. Or matlab, if not this, if segment revenue is 10% or more of the overall segment revenue, or if segment result is 10% or more of sum total of profits or sum total of losses, whichever is higher in absolute terms. Only for this beta we have this sum total of profits or sum total of losses, whichever is higher in absolute terms, because loss can offset a profit figure and the overall profit or loss beta can be negligible. That is why I said beta we take profits or losses separately and then we'll see whichever is a higher figure. Now, apart from these 3 conditions, I also told you as such beta that management at its discretion can include any other segment as such beta as a reportable segment. At their discretion, they do not have to go by any of these limits. Whatever are the reportable segments identified based on these conditions as such, guys, should contribute to at least 75% of the external revenue. Matlab others category cannot have more than 25% of external revenue. So if those 4 conditions के हिसाब से बेटा 75% criteria is not met, you will have to identify more segments as reportable segments so that you satisfy that limit. If at all a particular segment as such, guys, was identified as a reportable segment because of the 3 quantitative limits in the previous year, but it no longer satisfies those quantitative limits, you will have to continue to report that as reportable segment for 1 year. If a particular segment as such beta satisfies those 3 quantitative limits for the very first time in the current year, you will have to immediately start reporting that as a reportable segment and also give comparative data of the previous year unless it is not practicable to do so. Are we clear, guys? इसके बाद में, for the purpose of disclosure requirements, we will have to also understand what are primary segments and secondary segments. The predominant source of risk and returns as such beta will decide whether your business segments are primary segments or whether it is your geographical segments which are primary segments. Usually beta, what are the primary segments? Business segments. If the risk and return of an organization is majorly impacted on account of the product lines, you will term business segments as primary segments. If it is impacted as such, guys, by the location as such beta of the business operations, then geographical segments should be considered as business segments. Alright. So it should be considered as primary segments. Whatever is the predominant source, that will become primary segment. Dusra wala beta will become your secondary segments. Standard also says you can go by how the information as such beta is reported internally as such beta to identify the significance of the segment. मतलब क्या business segment हो सकता है, क्या नहीं हो सकता है बेटा. All of that can be determined from internal reporting. Obviously, organizations will have internal reporting to identify the performance of different regions and different product lines. Alright, guys. Next, once you have identified what's a primary segment, what is a secondary segment beta, there are higher disclosures for primary segment, lesser disclosures for secondary segment. For primary segment, you will have to disclose segment revenue, which should be further segregated into how much is revenue from external customers and how much is inter-segment revenue. You should disclose segment result, reconciliation of segment result with the overall profit, segment assets, unallocated assets, segment liabilities, unallocated liabilities, capital expenditure, depreciation and amortization, other non-cash items. All of this information is required to be disclosed. The best way as such beta, we did 2 questions as such, guys, on disclosures. अब ये देखो यहाँ पे we have divided our segment revenue into 2 categories. How much is external revenue and how much is revenue beta with transactions with other segments. All of the revenue beta with other segments will be eliminated under inter-segment elimination column and only the overall external revenue will form part of your total column. उसके नीचे segment expenditure is not required to be disclosed. You will directly disclose segment result. And immediately under that you will write unallocated incomes or expenses so that you reconcile segment result with the overall profit that you are reporting in the income statement, P&L statement. Then you will give disclosure of segment assets, unallocated assets, segment liabilities, unallocated liabilities. उसके बाद में बेटा you will disclose whatever is the amount of capital expenditure, depreciation and amortization, guys, and other non-cash expenses. वो नहीं दिख रहा है क्योंकि वो question में नहीं था. Are we clear about this, guys? तुम ढूंढ रहे तो बेटा, it is not there because it was not there in that question. For secondary segments beta, the amount of disclosures are less. For secondary segments as such beta, you are supposed to disclose external revenue in respect of each location whose revenue beta is 10% or more of the overall external revenue. You will also have to disclose segment assets, guys, whose assets are 10% or more of the overall segment assets, and capital expenditure. Only external revenue आता है बेटा secondary segment में. You will not have inter-segment revenue. Are we clear? Apart from this, guys, the accounting policies that we follow for the preparation of the main financial statements, same accounting policies as such beta will be followed for segment reporting as well. However, for inter-segment transactions, you may have separate accounting policies. Doesn't matter whether you're transferring them at cost or below cost or above cost beta, whatever it is, we have no objection to that. It is just required that you disclose it so that investors understand. If it is different from the main accounting policies, if it is exactly the same as main accounting policies, वो करने की भी जरूरत नहीं है. All right. If there's any change in accounting policy as such beta, you will have to give a disclosure about that also as such, guys. Why? So that people will be able to compare the performance of 1 year as such, guys, with the performance of an other year. That is the reason as such, guys, why informations are required to be disclosed. Is that clear, guys? That's the end of AS-17 also. If you have only one segment as such, guys, one business segment, one geographical segment, Disclosures will not be required, guys, under notes to accounts because the entire P&L statement and balance sheet as such beta will be in respect of that one business segment and one geographical segment only. Is that clear, guys? Chalo beta. That's the end of AS-17. AS-26 done? No? Nahi kara revision? Alright, guys. We are revising AS-26 now.